Hello guys, welcome. The last class, the last classes, I was talking about how to use candlestick analysis, understanding different candlestick analysis patterns. We talked about Beribozu, Haramis, that is single candlestick patterns. We further went further to talk about double candlestick patterns like bullish and bearish engulfing, tweezer tops, tweezer bottoms, inside bar patterns. We further went to talk about three candlestick patterns such as morning star, evening star, three white soldiers, three black crows, and we are going to be going further in our class, right? So today we are going to be talking about one very important topic in forex trading, which is support and resistance. Now, support and resistance is a very important topic in technical analysis. Very important topic in technical analysis, right? It will help you understand a lot about entries. You know, when I was talking about candlestick analysis, when I talked about different candlestick patterns, you don't just enter the market anywhere you cite any of those candlestick patterns because it is not on a particular area. Now, support and resistance are the areas we'll be looking at to help you better understand where to enter, where to exit the market. So now, support and resistance is a very strong technical analysis tool. Now, in support and resistance, we have what we call first of all the support, we have what we call the resistance. Now, support is the lowest point reached. Let's say price is going down. The support is the lowest point reached by price before price changes direction up, while resistance is the reached by price, highest point reached by price before market changes direction. Right? So support is the lowest point reached by price before the market changes direction, while resistance is the highest point by price, highest point reached by price before the market changes direction. Right? Now, when I started the candlestick analysis part, I told us that we have three different kinds of chart patterns. I said we have the bar chart, we have bar chart, we have candlestick chart, and and we have line chart, and we have the line chart, right? Have line chart. Now, for you to draw support and resistance, we are going to be making use of the line charts. Reason being, I talked about the structure of a candlestick, right? When I said that there is the low, in the case of buying, you have the low, you have the high, you have the open, you have the close, right? In the case of buying, we said here was the low, here was the high, this is high, this is low. In the case of selling, this was the low, this was the high. Now, when you are drawing support and resistance, you need to switch to line chart because these shadows are not really price. The body of this candle, is the main price. The body of the candle is the price itself. So like I was saying, um, we have the candlestick, we have the candle body, we have the low, we have the high. Now, like I said, those weeks are not really considered because when drawing support and resistance, because they don't reflect um, true price movements. You understand? They are weeks. They are like shadows. The main thing we consider is the body of this candle, the body of the candle, right? We are considering the body. So now, once you switch your chart from candlestick chart to line chart, it will not show you those wicks. It will only show you the real candlestick body. And now you need this the body when drawing support and resistance because it is the body that reflects the true the true uh, areas or support and resistance of price. Let's go to MetaTrader app. so that we can understand better, right? um okay, now we're in our app. Now this is our candlestick chart. I showed us how to draw um, line chart, or how to switch to line chart before. Let me just show us again. Like I said, you just touch the screen of your MetaTrader app, then you go to this setting here, this point, this setting, right? You click on setting, then when you check up this area here, you see line type, you click on it, right? Then you see bar chart, candlestick chart, and line chart. So we switch to line chart, right? Switch to line chart, then you click on line chart and you click on back. Now you notice that you are now in, it has taken you to it has made your chart line. Now you notice that our chart now is somehow zigzag, 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 zigzag. Now this zigzag you are seeing here is reflecting open, close, or price. Now let's switch back to candlestick chart. So I'll show you why it's important to draw your support and resistance with a line chart, because once you are in line chart, those wicks, those shadows will not show. So let's switch back to candlestick charts. Right now, this is, let me use an example. If you notice, there's this big wick here. I think this is a hammer, because remember, hammer, it goes down, then it forms this pattern. No, this is not even a hammer. This is a hammer. No, this is a doji. Sorry, a doji, right? It's a doji. Now, if you notice this doji now, when we're in candlestick charts, it is showing here that price went as low as this point, right? That is around around this region, right? If you notice, you also see this week. You have seen this week. We have seen this. You see this week. This week's here. But the moment you switch to line chart, you will not see any of the. You will notice that price is around this region. Let's switch back to candlestick charts. Sorry, line chart. Now, so what I was telling you. Now, look, all those weeks we were seeing before, we can't find them again. You understand? So those weeks are not true reflection of price. Price just passed them, but we call them shadows. So when you are drawing your support and resistance, we are more interested in the highs and lows, or the areas where the body of the candle touched. You understand? So that's why we have to switch to line charts, to be able to get a better view of the areas price has touched. You understand? So now let's go back to MetaTrader app. Now, like I said before, we have resistance, we have support. The resistance is up, and it is the area price went to before it reversed. So we consider this, for this place, resistance. Then support is below, and is the area price touched before it reversed, right? Now in like I was telling you, we have the area up is resistance. These areas like this are resistance, while the areas that price touch below, we call them support. Areas price touches below before it reverses, we call them support, right? These are more examples. I will show you practical example on how to draw support and resistance, so that it will be easier for you how to draw support and resistance. And like I said, support is below, resistance is above, right? And one thing you need to know is that we have two types of support and resistance. We have the horizontal support and resistance. That is where the support and resistance is in a straight line. My line is not really straight. Come on, let me try and draw something better. We have resistance, and we have support here, and we have resistance here, right? So now this is our resistance, resistance. This is our support. This is our support, right? Now, then if the market begins to go up like this, go up, go up, go up, this area it touches before it goes down, like I said, is resistance. When the market begins to go down, go down, go down, this area it touches before it goes back up again, we call it support, right? Now, like I said, we have two types of support and resistance. We have the horizontal one, horizontal support and resistance, which is a straight line like this. Price just keeps bouncing like it's bouncing in a rectangular or a square box, just up and down, up and down. Then we have trend lines. Those ones, they are like this. They are up. We have this one represents where the market is going in an uptrend. In an uptrend, right? As to say, the market is the price goes up like this, come down, goes up like this, come down. Price keeps going up in a up manner. Then we have the one we call trend line for downtrend, right? Trend line for downtrend. The market is going like this. As you see, the market keeps going up, down like this, up, down like this. We call this one downtrend. Downtrend, right? Downtrend. You understand? Downtrend. So now, let me show you practical examples of horizontal support and resistance on our MetaTrader app. So now, when you come to your MetaTrader app now, I think it would be better for us to switch switch the app from portrait mode to auto rotate, so I can have a better view, so I can see more of the chart, right? Okay, now I've switched to auto rotate. Now I have a larger screen view. Now for us to draw horizontal support and resistance, what we just need to do is to find two or more areas where price has touched. You understand? Where price has touched previously. Now what you just need to do is you touch your screen, right? When you touch your screen, you see this this area that is showing this here, like triangle, rectangle, right? Triangle, rectangle. You click on it, and you click on this this horizontal line. When you click on it, now it gives you the horizontal line. Now I'll now check my chart for the previous areas that price touched, whereby the horizontal line can touch both of those places at the same time. Now I just drew this. Now this is a perfect example of a support. You notice that when these are the previous areas that price touched at this point exactly on the same horizontal line. We make this point, we mark this point as our support. Now we click on our screen again to try and find if we can get a resistance. Remember, resistance is always up. A point where where price has touched twice, right? Where price has touched twice. I think this should serve as an example because okay, yes, this is a perfect example. This is a resistance because price touched it here once, price touched it here twice, right? And this same resistance, when price broke out to that point, it became what we call support. I will explain this is what it means when price touches a support or a resistance and breaks it, and later becomes another support or another resistance. I will explain. So from this example, we have been able to see how to draw. We have drawn support here. Now, if you notice from this example, when price touched this point, market went up, When it touched this resistance, it went down, went up, then before it broke out from here and went further up, right? So I will explain better. I will explain more what this thing means. You understand? So now this is just how support and resistance is. Support and resistance is for just how support and resistance is for horizontal support and resistance. For horizontal, remember I said it is on the same horizontal line, and price keeps ranging up and down through it. Price keeps ranging up and down through it. So this is for horizontal support and resistance. Now I'm going to explain why it is important with respect to candlestick analysis. If you zoom this line chart, let's switch back to candlestick so that we can see the kind of candlestick patterns that formed there. Now, if you notice the candlestick patterns that formed on our supports, you notice that it is, like in this case here, is tweezer bottom or inside bar pattern. You understand? The market went down, formed the inside bar pattern, before you know it went up. So now, what we are trying to achieve when in forex trading is we are trying to see how we can combine one or two or more tools to be able to give us better entries. Now, in this case, we first of all, the market was an downtrend check. We have seen a candlestick pattern, which is an inside bar pattern, or tweezer bottom, which is telling us that it's a buy signal check. It formed on a support and that check. So this is giving us very, very strong confirmation that this market is going to buy. Understand? So once you have gotten like 2 or more confirmation, it's a very good entry. What you just do is just need to enter your market, then you pick your stop loss below where the pattern formed on the support, right? Then you pick a point or the next resistance as your take profit, because that is the point that price is most likely to change direction, right? So now that we have gotten our entry, gotten our stop loss, gotten our take profit, all you just need to do is enter. So you see, the whole trading process is actually very simple. You just need to understand what tools to combine what you need to do. So let's check the pattern that formed on this resistance. We notice that price was ranging. Different patterns formed on this resistance. First of all, we see hanging man, this one. We see spinning tops form next. Then see doji, spinning top. You understand? So this pattern now, different kind, although it did not give us a fully confirmed bearish pattern, but we can take this as a evening star pattern. The reason being, we have a big bullish candle, then a spinning top in the middle, and then this big bearish candle, which is telling us that this is a evening star pattern. So this is a confirmed signal. Reason being, the price went up, gave us this evening star pattern, then went down. So all you just need to do is pick a point above as your stop loss. The next support becomes your take profit, right? Then that's all. There's no rocket science about the whole thing. There's no rocket science about the whole thing. Now, the advantage of having your support and resistance is that it becomes like a marker, because for the fact that price broke out from it, like in this case here, you notice that price went up and broke out at this point here. Then after it broke out, we have what we call retest. Retest means that the price broke out from it, right, and went to touch that resistance it broke out from. When it goes back to touch that same place and go back up, we call it retest, meaning that resistance that it broke out from has now become a support. Understand? That resistance has now become a support. So we call this place, this point, we say that the market broke out and retested the resistance, becoming a support now before going further up. You understand? So now now that our line is our support and resistance is still drawn, we notice that anytime price comes towards that resistance or support that we have drawn, there's always a particular kind of reaction towards that line. Now see this case here, when price came back to this resistance, right, immediately it touched the resistance, it went back up, telling us that you see, resistance and support are specific areas in the market that have significant impact on price. Once the price, you understand, the price reaches that particular point, it reacts in a certain way, just as we have seen in this case here. You understand? Immediately it touched the line, it bought for some time, right? Bought for some time before it went back down, then broke this point again and went further down. So like I said, you mark out you take note of the support, take note of the resistance, because anytime price reaches those areas, it usually reacts in a specific way. You understand? So when you are looking for a candlestick pattern to enter a trade, it is always advisable that you check for those patterns in support or in resistance. You understand? It makes you have better entries, makes you enter better trades. It reduces your chances of loss because you are making trading decisions at specific regions of price. You understand? So now we have marked our support. Remember, marked as, like I said before you draw your support or resistance, first of all, you just need a point that price has touched twice, right? Price has touched twice. You now draw your horizontal support, horizontal support or resistance. That just as simple as that. With time, when we reach the area of demand and supply, I'll teach you how to mark out points that price has touched only once and change direction. I'll explain to you what they mean and why you should make trades on areas that price has only touched once, just once. Why you mark them and why they are significant price areas. But for now as we're talking about support and resistance, when you want to cite them out, cite support and resistance. For horizontal support and resistance, all you just need to do is change your chart to line chart, then look for 2 points price has touched on exactly the same area horizontally. You understand? Horizontally, mark them out, then take note of them, because anytime price reaches that area, it will always react in a specific way. So now, like in this case, now price is currently around this region, right? So even if I want to enter any trade there, I'll wait for price to either reach here and form a specific candlestick pattern telling me to sell. You understand? Or I'll wait here, wait for this point. You understand? If price goes down and forms a specific candlestick pattern that tells me to buy, then I buy. But if I don't see any specific candlestick pattern, I wait, because there's high tendency that it might break out and continue going down, or break out here and continue going up. Remember, when it breaks up and comes back to touch that same point it broke out from and continue going up, we call that point retest. We can say if it breaks the resistance, we say it broke the resistance, then price retested that resistance to become a support. And if you check well, you notice that the pattern it forms on the resistance, um, um, if it breaks the resistance and comes back to the test, the moment you notice that it forms a buy pattern on that resistance that it broke, you enter, because it is giving you a signal that it has changed from it is not, as it has broke out from the resistance, price is going to continue going up further. Then if it breaks down in the support, you understand, and comes back to retest and gives a sell signal, what it means is that it's telling you to sell. You understand? So there's no big deal about all these things. It is as simple as anything. If you notice in this point here, the signal they gave us here was um, see this Haramis, then was a morning star Haramis. We have Haramis here. We have the Haramis candlestick pattern. We have the doji, then big bullish candle, which is morning star telling us we should buy. As simple as that. There's no big deal about the whole thing. You understand? So let me check for another market, and that market where we can draw support and resistance. Let me switch back to line chart and see if there's still any opportunity to draw any support and resistance here. I think there's none. Let me add horizontal line. Here we can't add any 2 points. Okay, we can. No, we can. If you notice, price touched this point here, and price also touched this point here, right? It came in, retested, and went down. So we can call this point a resistance, this point here, and that resistance. So now for this particular market, let's switch back to line chart, sorry, candlestick chart, right? You switch back to candlestick chart. Now we notice that we have 3 points of interest, 3 particular points of interest that we're marking out, that just in case price reaches those zones, we enter trades. So remember, you will not just enter any trade anyhow. You need to check out the support, the resistance. You need to check out the kind of candlestick pattern that forms at the support or resistance to help make you get better entries. You understand? So there's no big deal about it. And the next one we're going to be talking about is trend lines. Well, I said I'm going to show more examples with other markets. Let me switch to other markets. Let me check maybe EUR, JPY or other market and see if I can draw a horizontal support or resistance. Okay, I opened GBP JPY. That's Great British Pound Japanese Yen. So remember, you will switch to portrait mode so I can be able to have a better view or a wider view of the market, right? So now I'll switch to portrait mode so I can have a better view, right? Now what I need to do next is to switch to line chart, right? Line chart, then get our horizontal line and check for previous zones that price has passed, if we can be able to draw any support or resistance. If you can't see any points that price has touched previously, don't force it, right? Don't force it. Okay, don't force it. If you don't see anyone, don't force it at all, just let it be. Okay, I don't think there are horizontal, the current market structure, it's not in a horizontal support or resistance. So what we do is we check for another market. Since we can't find any for horizontal support or resistance, let's switch back to candlestick chart. Like I told you, don't ever try to force the line to form. If you can't find any, just leave it and check for another market. So let me check another different market. Okay, this is EUR USD, that is euro versus United States dollars, right? So let's switch to horizontal, let's switch to line chart and see if we can get any horizontal support and resistance. Line chart, horizontal support and resistance. If you don't see, don't ever force it. Okay, this one matches. So we have been able to draw support. Price touches this one at 2 points. I'm able to mark out this point and this point. So we're able to draw support, right? Let's see if we can get resistance, horizontal support or resistance. Let's see if we can get resistance. If we can't get, we will not force it. Okay, so we can mark out this point as a resistance because price has touched it twice. As you can see here, price touched it twice. You can see price touched it twice, one here and one here. So we can say this is our resistance. So for EUR USD, we have been able to get a horizontal support and resistance, right? Horizontal support and resistance. So the next thing we need to do now is to switch it back to candlestick charts so that I can explain for you the patterns or what made the market change direction and why you should consider using it. Let's switch back to candlestick charts. Candlestick charts, right? Now, okay, if you check at this support now, the candlestick pattern that formed here is inside buy pattern before it went up, right? Inside buy pattern, it makes it valid. Let's check this point here. This one here is this candlestick pattern that formed here is bullish engulfing pattern. And see the candlestick pattern that formed here is evening star on this resistance. Evening star candlestick pattern, bullish candle, doji, and bearish candle. So you understand that this thing follows a pattern, a sequence. Although in this case now, the market has broke out from this place, from this support, and it didn't come out to the test. One thing you need to understand is that it is not always the case that when the market breaks out, it's a must, it must retest. It's not a must. Sometimes it just breaks out, and when it breaks out, it goes down directly. So now, if we are to consider or look for any entry in this market now, what we need to do is we wait for the market to come back around this region, right? This support that has now turned to a resistance, right? So now when it comes to this region, I will notice it forms a sell pattern or a candlestick pattern as it's telling us that the market is going to sell. Then we enter and we sell further down. But if it does not give a sell candlestick pattern here, you wait and see if it will break out. If it breaks out, then it comes back to the test and gives a buy signal, right? Then you enter the buy and ride with it up. Then when you're riding it up, you will consider this point, this resistance here, as your take profit. Then the point you entered, below it, you take it as your stop loss. So I think I'm going to stop here for this part. In the next class, I'm going to talk about horizontal these trend lines for both uptrend and trend lines for downtrend, and how to take advantage of them to make profits. Thank you.